Hey there everyone, what's up? Guys, as you all might be knowing, whenever a company is planning for expansion or it requires huge funds for investments, one of the ways the companies does this is through the IPO, that is the initial public offering. So, whenever a mutual fund house wants to launch a new scheme, they come up with a public offering which is just like IPO. This public offering by the respective mutual fund house is known as the new fund offer, or more likely an NFO. It is important for investors that NFO is similar to IPO, but it's not an IPO. As for the IPO, at the time of listing, the higher demand might fetch you healthy listing gains, but this is not the case with NFO. The NAV, that is the net asset value of mutual fund, does not depend on the supply or demand of the mutual funds. We are having 3 NFOs this week, which is ICICI Prudential Nifty IT Index Fund, the IDFC Mid-Cap Fund, and Canara Robeco Banking and PSU Debt Fund. Guys, in this video, let's have a look at these NFOs one by one. So first is ICICI Prudential Nifty IT Index Fund. The benchmark for this is the NIFTY IT try. The fund managers are Kaizad Eglim and Nishit Patel. The minimum investment amount in this fund is Rs 1,000 and any amount thereafter. The NFOs open and close dates are 28th July to 11th of August 2022. Guys, let's talk about this fund now. As the name suggests, the ICICI Prudential Nifty IT Index Fund is an index fund which tries to replicate the Nifty IT Index. So index funds is a kind of passive mutual fund that tries to replicate the underlying index. In our case, it would be Nifty IT Index. Hence, there won't be any kind of active investing in this, but just tracking the Nifty IT Index with an aim to minimize the tracking error. Guys, remember, larger the tracking error, lower are your returns. The index is comprised of 10 companies. The top 2 companies, that is Infosys and TCS combined, have a share of more than 50% in this index, which means that the movement in either of these stocks will have a huge impact on the index while compared to others. Guys, since its inception, the index has given a stellar performance. Well, also the higher returns are always accompanied by risks, as you must be knowing that risk and return go hand in hand. Guys, one of the common risks which can be associated with investing in stocks or even indices is its volatility. But other than this, investing in an IT index fund also brings some other risks. 1. The majority of the IT companies, my friends, they have their clients in the USA, which makes them more dependent on the regulations of that particular country also. Second risk. The companies are also impacted with currency volatility. Third risk. There is a huge weightage of the top 2 companies in this index. Any adverse news or events related to those 2 companies can affect the index very badly. Guys, in the table on the screen, you can simply check the performance of some of the other schemes by this ICICI Prudential AMC. And now on the screen, you can see the education, the past experience, and all the schemes under management of our 2 fund managers of this fund, who are Kaizad Eglim and Nishit Patel. Guys, the next NFO on our list is the IDFC Mid-Cap Fund. The benchmark for this fund is the S&P BSE 150 Mid-Cap Index. The fund managers are Sachin Relekar for equity portion and Harshal Joshi for debt portion. The minimum investment would be Rs 5,000 and any amount thereafter. The NFO open and close dates are 28th of July to 11th of August 2022. Let's first understand what actually is a mid-cap fund. So a mid-cap fund is supposed to invest at least 65% of the total assets under management in mid-cap stocks. According to the Association of Mutual Funds in India, AMFI, in consultation with SEBI, companies when arranged in increasing order of the market cap, the 101th company to 250th company is considered as mid-cap stocks. Guys, the mid-cap stocks have a higher return tendency than the large cap stocks as they have more growth opportunities within them. Guys, now let's understand quickly how the fund manager is going to pick their stocks here. So the stocks are mainly passed through their 5 filter framework. First of all, the company's governance and business model is studied very properly. Then the capital efficiency is checked, whether the invested capital is being utilized properly or not, and how and what are the returns on that invested capital. Next, does the company have any competitive advantage, maybe through cost or product differentiation? Next question is, how scalable is the business? Also, does the company still have growth opportunities? And last is risk and reward based on the opportunities on the table. Guys, in the table on the screen, you can check the performance of some of the other schemes by this IDFC fund house. Talking about the fund manager, Sachin Relekar, his education, his past experience, and all the schemes under his management are shown to you on the screen now. The last NFO on our list is Canara Robeco Banking and PSU Debt Fund. The benchmark for this is CRISIL Banking and PSU Debt Index Fund. The fund manager is Avnish Jain. The minimum investment amount here is 5,000 rupees and any amount thereafter. And the NFO open and closing dates are 29th of July to 12th of August 2022. As the name suggests, the banking and PSU debt fund mainly invests in debt securities of bank and public sector units, or what we generally call them PSUs. The fund has to invest a minimum amount of 80% of the total assets in bonds and other debt instruments issued by the public financial institutions. For example, PFC Limited, NHB, IFCI Limited, etc., PSUs and municipal bonds. The fund can invest a maximum of 20% into the debt securities, which is issued by entities other than PSUs, and a max of 10% can be issued in REITs and InvITs, which means Real Estate Investment Trust and Infrastructure Investment Trusts. Now, why to invest in a debt fund, that too mainly in banking and PSU debts, you must be thinking. Well, we had been witnessing very turbulent times in the stock market from the beginning of this year, guys. In such volatile conditions, a debt portion in the portfolio provides safety to the investors. Talking about the banking and PSU debt securities, banks are regulated by the RBI, and strong holding of government in PSUs and PFIs market make them quite reliable. In such volatile times, investment in good debt instruments, that too with quality bonds, can probably give decent returns with little safety. Now, you might think that as a fund mainly invests in banks and PSU debt instruments, it must be a risk-free investment, right? But wait, that is not the case. The returns that you get are, in a way, attached to the inherent risk of the instrument. The bonds of banks and PSUs are also attached with the credit risk like other companies. What credit risk basically means is that there are chances that the borrower will default on its payment. Of course, the credit risk of these organizations are very much lower, but it won't be a totally risk-free investment for you. Guys, in the table on the screen, you can check the performance of some of the other schemes by this Canara Robeco fund house. Yet again, our fund manager Avnish Jain, his education, his past experience, and all the schemes under his management is shown to you on the screen now. So guys, these were the 3 NFOs which are open for subscription, and soon they are gonna get closed. Please note that this is not a fund recommendation, but purely for information purposes. If you like this video, please hit that like button, and please don't forget to share. We bring such quality content for you on the regular basis. Also, to receive more updates related to the mutual funds, please don't forget to subscribe Groww's channel. Bye-bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.